Welcome to the May update for AFM. This month I've got Feasey here with me, Regional Manager for AFM, who's been doing a fantastic job during this time. You know, with the federal election out of the way now and all of the changes we've had during May, I know myself it's been probably busier than even during the GFC with products and policies, serviceability, rate changes. How are you finding mortgage brokers out there dealing with that?
The backlash and the noise off the back of the Royal Commission, it did probably take a little bit longer to settle down than we would have anticipated. I suppose that with our position and our offering, we're in a space where we were able to be agile and adaptable to the situation. I think the brokers really saw the value in that.
One of the challenges we have as a lender with multiple funding lines during these times is the huge range of products and offering we have, and I guess that's why over the years we've developed the scenario specialist model where we spend that more time up front with brokers helping work through and structure the deals or answer their questions. And do you think that's helping?
Yeah, absolutely. I mean, it adds an element of convenience in a time where there is a lot of perceived chaos, so brokers do find a lot of comfort in that. It's convenience in the front end and it saves them time, but it's also convenience in the fact that it gives them confidence in their conversion piece.
One of the stats we've picked out over May, we've seen a pretty big uptick in serviceability, reasons why loans aren't proceeding. I think that's just on the raft of a number of changes in servicing calculators, living expenses, statements and no statements, things like that.
But it's one of the biggest hurdles in allowing people to be able to enter the market or grow their property portfolio, whatever it may be. So we do have the luxury of having multiple calculators, and what that does is first and foremost it allows there to be able to be different types of consumer situations that can be considered. And of course we also have the luxury of having a calculator that does heavily serve investors by way of taking actual repayments as well.
So obviously in May we've seen a lot of lenders, particularly around the low doc space, change policies, even withdraw from the low doc market. How are you seeing that from the brokers you're dealing with?
We already did have multiple options requiring just the accountant's declaration. I suppose combining that with the recent price decrease in our prime space, it has really generated a lot more inquiry through our scenario team, but also a much higher conversion, a higher product uptake. Low doc is one of those spaces where I guess the conversion piece from the outside can look a bit more challenging.
Yeah.
So we try to be able to accommodate that as best as possible with our low doc checklist. We want to be able to give our brokers the most comfort and confidence at the front end to submit an application to us and know that the intention is to be able to move that from application to approval as quickly and efficiently as possible.
Yeah.
So obviously there's been a lot of noise, a lot of changes to the macro environment at the moment, most notably the federal election. What are your thoughts from a business perspective?
From my point personally, there was a lot of noise coming out from both sides of politics. Obviously brokers were looking to be in a bit of trouble, I guess, if Labor did get in, and it was quite a doom and gloom situation. However, one thing I've been saying to brokers and even the staff is that one thing for sure, the ecosystem will survive. There'll be brokers, customers and lenders at the end of the day. And I've really been just trying to concentrate on week to week, month to month at the moment, rather than getting too hung up on what may happen. Thankfully, obviously the election's been run and won, the LNP are in, and obviously that steadies the market a bit, particularly for the broker industry, which has grown strength to strength.
I'd be interested to hear what your thoughts were for the foreseeable future for AFM.
Pretty much, really trying to consolidate on the brand equity we've been building in the company. So there's been a massive drive from the team and particularly the marketing team to build the AFM brand out there in the broker space. It's obviously a huge challenge as a smaller non-bank lender competing out there and standing out from the crowd. Definitely working extremely hard with our funding partners, trying to get ahead of the curve with some of those niches and opportunities to compete with some of the second tier and major banks as well to keep AFM front in mind with brokers, and also really conscious of our service proposition as well, so ensuring that we drive that SLA, keep consistent. I think at the end of the day, all brokers want to know is when you put a deal in, how long it's going to take to get a response. We're heading on for a record month in applications, so hopefully we can continue that trend, and definitely inquiry strong as well, so fingers crossed it's a good finish to the financial year for 2019.